Hey everyone, this is Nadine, Realtor ATX, and this is episode 2 of Real Talk. Welcome again. Let's get right into it. So, one of the first things I realized whenever I'd ask someone, why haven't you purchased property, was that so few of them knew what programs were out there. I can't tell you how many of them had never even heard of an FHA loan. So what is an FHA loan? Basically, it's a conventional bank, savings institution, even credit union loan that's guaranteed by the Federal Housing Authority. And here's a short history lesson. A ways back, real estate ownership was practically impossible for folks like you and I. Banks required hefty down payments, 3 to 5 year terms, and balloon payments only the wealthy could afford. Now, we don't often love when the government steps in, but in 1934, that's exactly what Congress did, creating the Federal Housing Authority, which gave banks insurance against possible loss, thereby allowing them to be more lenient with their qualifying benchmarks. And voila, more Americans got into homes of their own. So who qualifies for an FHA loan? Well, here in Austin, it's great if you're looking to buy your primary residence. You won't be able to buy a second home or a straight-up investment property. However, investors, here's something for you. You can buy a duplex, triplex, or fourplex, living in one of the units and renting out the others. Now, if you are already living here in Austin, you know that there are a ton of these types of properties. Do me a favor, reach out to me because I love these types of deals. And FYI, an FHA loan isn't just for first-timers. You can use it every time you're buying your primary residence. And here's something for our 62-year and older friends. Can you say reverse mortgage? I'll get back to that in a later video, but don't hesitate to investigate that one yourselves. Now, what are the criteria? Here in Austin, in order to get approved for an FHA loan, you will need a minimum of a 600 credit score for a maximum 96.5% financing. Put another way, that's 3.5% down payment. However, full disclosure, every institution will have their own loan approval requirements. You may be asked to put up to 10% down for that same loan. So what is the downside of an FHA loan? Well, because you're putting down less money, the FHA is going to require a little bit more from you every month for the life of the loan. This is the mortgage insurance premium, or MIP for short. Actually, this is how the FHA funds its program, so the only way to avoid it is by putting down 20%, which sort of defeats one of the purposes for getting an FHA loan in the first place. Now, conventional loans with down payments of less than 20% will require private mortgage insurance, or PMI. The difference between PMI and MIP is that private mortgage insurance is likely to end once you've achieved 20% equity through payment of your mortgage, whereas the mortgage insurance premium must be paid through the life of the loan. When you're ready to buy your first home, be sure to work with the very best agents and brokers you can find. It can be a very emotional, exciting, and stressful time with a lot coming at you. It can be very challenging to always make the best decisions. All right, next time on Real Talk, we'll have Lana Horak from Motto Mortgage on to discuss down payment assistance programs. All right, hit me up in the comments with questions, guys. Some of those questions may become episodes. Subscribe and never miss out on key information for your investment future. And remember, financial freedom is accessible. Let's get there together. Nadine, Realtor ATX, out.